Hi, Facebook. It's Latoya from Genesis Enterprises coming to you live for Financial Friday. We're just going to give it a moment or two here for the audience to build, and we'll get started. Hope everyone's having an awesome Friday. As you can see, it's chilly here in the DFW area. We'll just give it another moment or two here. Hope everyone's having an awesome Friday. Today's topic, while the audience continues to build, is going to be on Trump's proposed tax plan, okay? So you guys definitely need to tune into this because this is going to affect a lot of people, all right? So, as everyone knows, tax season is around the corner. Um, Typically, your employers have until January 31st to get your, your W-2s or other income reporting forms to you, okay? Now, this is another tidbit that I'm finding out a lot of people don't realize about tax season is that you can file an extension to get more time to actually file your taxes. And I'll actually let you know that form number. It is actually form 4868. It's a extension form. Most tax professionals will recommend that you file this as soon as possible if you feel that you don't have enough time to get all your, deductions and income in to, whether you prepare your taxes yourself or to your tax professional, okay? So you want to make sure you're following these forms because what it does is it allows you to avoid penalties and interest if you do file the forms after the April now 17th deadline, because I think the 15th falls on a Saturday or something this year. So what this does for the extension form is it actually gives you an additional 6 months to file. Pretty cool, right? So basically during that additional 6 months, you can file anytime between the April 18th to October 17th to actually get your taxes e-filed for the current tax year. Now, you may be wondering, well, what if I miss the second deadline? Well, in that case, you can still file your taxes, but keep in mind they are subject to penalties and interest if you do owe taxes or if you're already paying on back taxes. So a tax professional basically would be able to still file that for you. We just can electronically file it. We would basically prepare the return for you, send it over for your signature, and then we would actually have to have you mail it in. Okay, so that's how you would handle that or previous year taxes. So just to give you a little tidbit on how the tax season actually works and how it affects you, okay? And that's for every year, the knowledge that I just gave out. So to go into Trump's proposal for child care tax deductions, I want you guys to listen, okay? Now, currently, what we have on the current tax forms, as you may see, is single taxpayer, head of household, married filing jointly, and married filing separately. Okay. Under Trump's proposed plan, he wants to get rid of the head of household. Okay. Now, for those that are current, and these are for my people that fall into the head of household with dependents, okay? So basically what's going to go on with that is, this is how this is going to affect you. This is actually going to fall under the, supposedly the child care tax breaks, okay? So currently, if you are filing head of household, he's planning on getting rid of that. Okay. And basically you will file as a single taxpayer. Now the offset to that is, for some middle class taxpayers, also, just so you know, my source for this is CNBC, very trusted source, you know, for money and finance knowledge. This is going to affect some of your middle class taxpayers, which unfortunately could mean you could be paying more under these tax proposals. So right now we have 7 federal tax brackets, okay, with rates that range from with 3 rates of 12, 25, and 33%. Currently, the standard deduction for single taxpayers is $6,300. Now, his plan is to move this from $6,300 to $15,000 for single filers, okay? So right now you may be thinking, well, that doesn't sound bad. I'm getting a bigger standard deduction, but this is the offset. And also for married couples filing jointly, he's looking at increasing it from $12,600 to $30,000, okay, for married couples filing jointly. Now, this is the trade-off. His plan is repealing personal exemptions for taxpayers and their dependents, as well as the head of household filing status, as I stated before. So this is the trade-off. Instead of you doing the itemized deductions, which could very well be over $30,000 for couples that are filing jointly, if you're forced to take the tax exemption of $30,000 as a standard if you're married filing jointly, or $15,000 for single taxpayers, that means if you have any items that surpass those standard deduction amounts, you can't write it off. Yeah. So say if you had a couple of surgeries that year, oral surgeries, or, dealing with your dental, if you've had knee surgery, things like that, that could have definitely well been over 30 grand for a married filing jointly, to include, healthcare costs, or maybe after surgery, dependent care, things like that. If it's over $30,000, say if that costs you $40,000, you lose the $10,000 that normally you would be able to itemize. Okay. So that's the thing that has a lot of people in an upset. Like, well, if I got over single taxpayers, if I got over $15,000 in deductions and you're forcing me to just take the standard deduction, that's it. That's it. Okay. Now, as I stated before, what is going to happen is, in other words, if single parents with dependent children and most married households with at least 3 dependents would end up paying more under this tax plan because of federal income taxes. Okay? So I'm just going to give you a little bit of a breakdown. So the standard deduction plus personal exemptions under current law and Trump plan. This is going to be your difference, okay? Current law, head of household, if you have 1 child, your standard deduction is $17,400. If you have 2 children head of household, your current deduction is $21,450. If you are head of household and have 3 children, your current deduction is $25,500. Under Trump's plan, it don't matter if you got 1 child or 5 kids and you're head of household, your standard deduction is still $15,000. Yeah, that sucks, right? Okay, married couple filing jointly. Jeannie, I'm on the thing. Don't get in the camera. Really? Here. Go in there. Sorry about that, my 4-year-old. These are for my married couple filing jointly. Currently under the current law, your exemptions start at, for 1 child, $24,750. Under Trump's plan, it would be $30,000. So as you can see, if you're married filing jointly with 1 child, okay, you might have a benefit to it for 1 or 2 dependents, okay? But this is where, as I stated before, this is where it comes in to hurt you at. If you have 3 or more dependents, as I stated before, under Trump's plan, you still only can file $30,000. That's it. That's max. Under the current law, it actually increases the more dependents you have. So say if you are a married couple with 4 children, under the current law, you actually can do a standard deduction of $36,900. And under Trump's plan, you only get $30,000 regardless of how many dependents you have. So, as you can see, that's why a lot of people are kind of in an uproar, especially for my people that fall into the head of household. You are really going to see a hurt, when it comes to the tax exemption, because unfortunately there are a lot of people, especially in our generation, that are single parents. And they have 2 or 3 children that are dependent on them. And under this Trump plan, if you have 3 children, the most you can get back as a standard deduction is $15,000. And under the current law, that's $25,000. That means you're losing at least $9,500. And there's nothing you can do about it if this law is passed. Now, keep in mind, this law has not been passed. It is not in effect. These are all hypothetical if the law is passed once he gets into office, okay? Now, with that being said, for those that may have tax questions, this is definitely the time to ask them. The next few months, my Financial Friday videos will be pretty short because they'll be dealing with tax tips and things like that. So you definitely want to tune in to make sure you're maximizing your deductions. Also, red flags to look for with tax preparers. These are things you should be asking your tax preparer before you even give them your personal information. You can ask me things like that, of that nature. Actually, next Friday, my tax tips will actually be on red flags for tax professionals. Things to look for to avoid being scammed. I've heard so many horror stories from either family members or outside or, friends of them being, they hire someone to do their taxes. Everything went through. Next thing they know, they get an audit. They're like, I didn't even sign off on this. I don't know where these deductions came from. You do not want to find yourself in that situation, because I can tell you, the IRS are people you do not play with. I'm telling you, do not play with them. They are the ultimate of collection agencies, and they will get their money. Okay? So it's best to know this stuff firsthand, so you can avoid those situations in the future. So make sure you're dealing with, not necessarily certified, make sure your tax professionals have the correct credentials, okay? So with that being said, we're going to have Q&A here for a couple of minutes. For those just tuning in, I just went over the proposed standard deductions under Trump's plan. As you guys know, he's our new president-elect. He'll be taking office January 20th, 2017. So the proposed Trump plan they'll be looking at to try to pass it in 2018. So you definitely want to get this information, okay? Especially for those that are in the head of household category. This definitely affects you. You're single and head of household. You need to be paying attention to this stuff that's going on in the government, okay? It affects your money, okay? It affects your refunds, all of that good stuff. So if you got any tax questions, I'm going to be online here for the next minute or two. You can ask them now, okay?
I need to go.
Okay, Jenny, give me a few minutes, okay? I'm online. Go in there, bring it here. I'll open it. The joys of motherhood. Gotta get her done. Alrighty. Also, if you have not booked me, I have a few slots left to take advantage of the 10% early bird discount, okay? So if you have not booked me, go ahead and get your booking now. I will have a link below the video. I'll go ahead and post that. So you can take advantage of the early bird discount. We do have a question here from Miss Courtney. Thanks for joining. Okay, I can give you a snippet of what I just went over. So basically, for those that fall into the head of household category, under the new proposed Trump plan, I can just go back over really quickly on how this affects you. So under the current law, if you're head of household and have one dependent, the current law you can deduct, the standard deduction, is $17,400. Under the Trump plan that's proposed, you can only do a standard deduction of $15,000. Under the current law, as you know, it goes up in increments every few thousand. But unfortunately, under the Trump plan, the $15,000 doesn't change. Whether you're head of household with one dependent or 5 dependents, it's still $15,000. So unfortunately, with that, for those that fall into that category, this means you're leaving money on the table, which in turn means less deductions for your taxes, which means a smaller refund for those that may have multiple, have a large family, okay? If you're married, a couple filing jointly, again, you're good if you're under the 1 to 2 dependents. You start seeing the loss if you have 3 or more dependents, as stated before, because under that plan, the standard deduction is going to be $30,000. That's it. So does that answer your question, Courtney? Okay, awesome. You're welcome. Okay, for those that are looking for Jenny, hold on. For those that are looking for a tax professional, you can click on the link below, and book your consultation. I only have 25 slots available for the early bird discount. A few of them have already been taken. They're filling up pretty quick, and it's just early December. So you can imagine January is probably going to be a little hectic. So go ahead and go out there and book your consultation. They're free. This guarantees you a slot with me for the upcoming tax season. So you're not, say you give me a call or shoot me an email and you're like, hey, I need my taxes done, and I might not have a booking until like late February. That is what you don't want. Oh, also, for those that have the earned income tax credit, please listen to this announcement. Starting January 2017, if you file earned income tax credit, I know a lot of my people that tune in fall into this category. Your refund will be held. Are you listening? Your refund will be held until at least February 15th. So it doesn't matter if your refund was filed February 2nd, February 10th, February 12th. It will not be released to be processed if you're owed a refund until February 15th. So please keep that in mind when you're booking your appointments. I cannot rush that. That is the IRS new law beginning in 2017, which means January 1st. If you claim the earned income tax credit or additional child tax credit, it will not be released until February 15th. So please keep that in mind when you're booking your appointments, okay? Alrighty, that's going to conclude Financial Friday Live today, which was on the Trump tax plan. The link is below for you to book your tax appointments. And I'll see you next time. Bye.